Altcoins have finally started moving up, and this video is only going to be over altcoins, understanding what can Bitcoin do and what is the next part for Ethereum. The current heat map shows that Bitcoin is underperforming Ethereum. Ethereum is outperforming Bitcoin as of now. Altcoins are not dropping even after Bitcoin dropping, and the biggest reason that I've always discussed about is that Bitcoin dominance has finally broken its bearish structure and bullish structure, and now finally it has started its bearish structure after seeing a market structure shift. If we look at the current heat map, you guys can clearly see that all coins are going green. Ethereum has dropped a little, however, it recovered well, and Bitcoin is trying to trade above 94 to $95,000. If we look at the fear and greed index as of now or as of today, it's cooled down a little from 90 to 77, and the market is still in extreme greed. Now let's take a look at altcoins and what are some altcoins that can still give you a better setup in terms of the risk to reward ratio. So I'll directly be talking about Bitcoin first, and this is the one day chart of Bitcoin, and you guys can clearly see that Bitcoin ran right away or right impulsively from 73,000 right away to $99,888. Now, the dollar or the $100,000 mark happens to be a psychological barrier. So, when we see Bitcoin printing above $100,000, we are likely going to see a huge correction coming in soon or maybe before that. So, I expect or I anticipate Bitcoin to come back to this zone of $77,000, and I'm going to stick to that bias of being bearish. Maybe we might see a correction after we see this altcoins run, and that's going to be a small run for altcoins, and post that we might see a retest. So what I'm basically expecting is we might run up above $100,000, psychological target that a lot of people have. We start making a local top out, maybe for a quarter or a month or two, and post that we start falling down and we start getting distributed, and post this move we'll start expanding again. This is what I am personally expecting, and it highly depends on what happens in the month of December, because December has been very bullish for US markets. We can expect the same happening in crypto with sharp corrections. So, the another scenario is we can expect flash dips, and these dips can be or can last for a day or two, where we can expect something like this happening and we move up again in a day or two. So either a flash dip or a dip which is going to get distributed. Now a distribution dip is likely going to be like this, and we'll drop slowly. So we won't have large imbalances over here. But if it's a flash dip, then we are simply going to fall like this. So these are going to leave huge imbalances and fair value gaps here, which is likely going to be filled. This is all about Bitcoin. If you are looking to add Bitcoin in spot, this is not the right place to add Bitcoin. You should be aiming for $73,000 to $77,000 if you want to add Bitcoin in spot. Now, let's hop on to Ethereum BTC. So, understanding this is very important if you're someone who's interested in investing in Ethereum or if you already hold Ethereum. Now, when I take a look at the previous levels where we saw an Ethereum bull run from, it was this, and this level was triggered in the month of March 2021. Okay, now from a seasonality perspective, quarter one has always been bullish for Ethereum. Overall, for crypto, it's been good as well, but quarter one has always been very bullish for Ethereum when it comes to outperforming Bitcoin. So, when you see Ethereum outperforming Bitcoin, a lot of Ethereum's ecosystem outperform as well. And when Ethereum outperforms, post that we see a parabolic bull run in altcoins too. So kindly try to understand Ethereum needs to outperform and take out all the liquidity first. The moment it starts like sucking liquidity from Bitcoin, you'll see Ethereum outperforming, and post that we are surely going to see altcoins jumping in between that period only, where you'll see Ethereum outperforming. So as of now, when I take a look at the weekly chart, the base is still not been built. Now we need a base before we move up. This is still a faulty base, and at the same time, when you look at this whole move which is happening here, this is nothing but distribution. We are seeing small candles and a little parabolic or very expansionary candles, and those expansionary candles are only one. We need two or three expansionary candles to first break the market structure, and once we break the market structure, then it's going to be very important for us to move up. As of now, I see nothing bearish in the Ethereum's BTC chart. However, if we flip above this structure, I'll just mark this zone. Let's say if we flip above this structure, which happens to be right here, once we retest back, and then if we start moving up, this is going to be a market structure. This is going to be a market structure shift, and this market structure shift is going to be very bullish for Ethereum and for the Ethereum pair to outperform Bitcoin. That's all about ETH-BTC. Now, coming back to Bitcoin dominance. When you take a look at Bitcoin dominance, it has already made a market structure shift where we can see that the last swing low has been taken out, and we've seen a weekly closing below this, or we might see a weekly closing below this in 2 or 3 days. You need to keep your eyes on this closely. When we take a look at the 1 day chart, we've already seen a market structure shift below this swing low, and now market is simply trying to stomach this move. Post that, we might see a liquidity grab here, and then we'll start falling down again. Now this is going to trigger another altcoins rally. This is also another reason why, where we can see that Bitcoin currently is down by 0.26%, though Ethereum is down by 2%. Altcoins are not in the mood to go down at all. All of these altcoins are going up. But there's a catch here, and you guys need to stay very much awake of that. So you need to understand that USDT dominance is another thing that you guys need to consider. When I take a look at the daily chart of USDT dominance, I do see one thing, that it is quite near to its point of interest where we saw an expansion from. Now that we are in a bull market, we might not see USDT dominance outperforming, but at the same time, this is also going to be signaling a local top, or let's say, okay, fine, we've topped out as of now, we might retrace, or we might see the whole market retrace, and you need to watch this closely. On a 4 hour time frame, I see something quite weird happening, and this is the reason why I'm trying to lock in as much gains as possible, because we can see higher highs being made here. It's somewhere near higher lows, and I would not say higher highs. I'm still waiting for a high to be made here, and I am expecting this to get rejected from here, which happens to be this area of 4.5 to, let's say, 4.55. So you can see a small variation in that, and this might not be the exact zone where you might expect a reaction from, but yes, you need to watch this closely, because if this starts pumping right now, we are surely going to see a market drop. So it's better that you sit fiat and watch out for some levels when you are talking or looking at some altcoins. Now, those altcoins that you can keep your radar on are going to be, the first one is going to be Aave. Now, I have my personal money invested in Aave, so I would highly recommend taking advice from your financial advisor before taking any decisions. Now, I'm sticking to this entry that I shared earlier, and it's still the same, though it has moved up by somewhere around 27% from my entry, and I'll still be sticking to the same. So when I talk about taking entries in Aave, or if you're looking for taking entries in Aave, the first zone that you should be looking at is going to be in the dip, not right now, is going to be $189 to, let's say, 184. $184 to $189 is going to be a first POI, or point of interest, and the second point of interest is going to be this inefficiency to this mid of the OTE, that is going to be 159 to $170. You can probably look out for these two zones. I still expect Aave to go up to 240 to $260. If your average price is going to be somewhere around 170 to $180, you can easily print 30% to 40% in a single swing, and that's all you need. The second altcoin that you need to keep your radar on, and I personally have invested in this altcoin as well, is going to be Fetch AI. Now, Fetch AI has a beautiful setup. We saw a very good reaction from the OTE, and we can clearly see that post this OTE or the optimal trade entry, it started bouncing. However, it did not fill, though this fair value gap and this order block was tapped. Post that, we saw another tap and an expansionary move. Now, when I take a look at the same structure, if you see a dip, the first entry is going to be at 1.4, or let's say 1.4 to $1.5. That's going to be a first entry. The second entry is going to be in this zone. That happens to be another order block that I see. So this is going to be the zone, the 1.2 level to 1.3. These two areas are highly conservative. Now, if you are accumulating cryptos in a conservative zone from a conservative perspective, that I'll make sure that my entries are quite conservative, no matter I'll wait for the dip and stay fiat. You're surely going to be making more money than someone who's just foaming out in every pump and dump. So make sure that you wait for the market to present you with a better entry, and then you start looking out to infuse your or to deploy your fiat. The second one is going to be Fetch AI. Now, the third one, another thing that I have my money on is going to be Near Protocol, and I am very bullish on Near Protocol. Now, Near Protocol currently is highly undervalued. I personally see Near Protocol easily piercing or purging above $20 as well. But the current target or the recent short time target is going to be $10. You can probably expect Near Protocol to walk around these three zones, and these three zones are going to be $6.2. The second one is going to be $5.8, and the third one is going to be $5.4. Watch out these three zones closely if you are looking to, or if you are interested in accumulating Near Protocol. You can easily expect Near Protocol to print you somewhere around 60 to 70% by holding or putting a risk, or having a risk of 17% on the table. Try to conserve or try to reduce your risk and keep it as low as possible, and try to milk out the best you can out of every swings. I never talk about leverage trading or talk about trades that can make you overnight rich. None of these trades are going to make you overnight rich. You need to understand that, and you need to put in some time and keep your horizon long in order to make as much as possible. Now, the fourth crypto is going to be Ondu. Now, Ondu currently is setting up very nice. I still see Ondu with this structure going up to $1.3. If you are already holding Ondu, just make sure that you are adding more and more size, and you are simply adding more size to your winners. However, if you have not accumulated Ondu, this happens to be an RWA crypto. The sector is hot. It has a good use case as of now. The narrative is quite hot. You'll see strong infusions in Ondu, and at the same time, when I talk about these two zones, the Mark II zones that you can probably keep your eyes on in the flash dip, is going to be 88 cents and 81 to 80 cents. Now, these two zones are highly conservative. If you see Ondu coming up here, you can think about accumulating 30 to 40%, and if you've already had size, you can add up more. Now, the last crypto that I'll be talking about that I have on my radar is going to be none other than Pyth. I've already discussed OP in the past, and I'm talking about Pyth since quite a long, and it is currently up 20% from me because my entry average price was somewhere around 39 to 40 cents. Now it is up 20%, and at the same time, I do not want to deny to the fact that Pyth is the only market data project that is working with market makers, and helping out market makers with a lot of different asset classes data. Has a strong fundamental, and when I talk about the technical price action, there's nothing else that you need in a structure which is like this. You see a strong base with a lot of liquidity grabs and orders being punched with these wicks out. Another thing that I easily see Pyth doing is going up to 58 cents, and post that expansion or before that expansion, we might see a strong retracement down to 34 or 36 cents, and then 29 to 33 or 34 cents. These two levels are going to be some important levels that you guys need to watch. I don't see Pyth going below 31 though. So these two zones can be highly important for you guys if you are interested in accumulating Pyth, because I easily see Pyth crossing 70 cents to 80 cents. You need to keep your radar on Pyth, and if you are interested in accumulating Pyth, watch out for these levels. Now, the last one I thought of mentioning because Ethereum is going to pump. Similarly, Ethereum's ecosystem and layer 2 is going to pump as well. So, you probably need to watch out. OP or Arbitrum is going to completely be upon you whether you're interested in accumulating OP or ARB. However, the three zones or the two zones that you need to keep your radar on, this is going to be an OTE which happens to sit at $1.8 to $2.1 is going to be a great area where you can think about accumulating OP. So these are some cryptos that you need to keep your radar on. There's nothing that you should be accumulating right now because you need to understand the psychology behind the market. There's going to be a lot of retail FOMO right here. So it's better that you wait out and wait for the market to present you good conservative entries where you look to lock in your money and deploy your money. Manage risk till then, and I'll see you guys in the next video.